Federal Reserve. Right. Always making headlines. But what's the real deal behind their moves, and how does it actually impact you? It can feel a bit like trying to read tea leaves sometimes. So today we're doing a deep dive into the recent buzz around the Fed cutting interest rates. You sent this article in, so clearly you're as curious as I am, right? About what it all means, both the big picture stuff and what it means for our wallets. Let's untangle it together.
Absolutely.
Really jump into it.
Yeah, and one of the things that I found so interesting about this article was, it really tries to tie in what the Fed is doing to the government's own sort of financial health.
Right, yeah.
And specifically its debt, which, is massive and growing.
Yeah, it kind of grabs you, right? When you see the article called "The Rate Cuts a Panic Response," is that a fair way to describe it, do you think?
Panic might be a strong word, but I do think it underscores how these cuts aren't just the Fed kind of, doing their usual tweaking of the economy.
Right.
The article really emphasizes how much of a role the government's debt plays in all of this. And they're projecting it to, explode by $16 trillion.
$16 trillion. It's like, I don't even know I can't even fathom that. How do we even wrap our heads around a number like that? And what does it actually mean in a way that, we can digest?
Well, the problem is it leads to something that economists call crowding out.
Okay.
And basically, it boils down to this. When the government needs to borrow that much money, it's competing with, businesses, people like you and me, for loans.
Right.
And so the more the government borrows, the harder and potentially pricier it becomes for the rest of us to do things like get a loan to start a business or even buy a house.
Yeah. So it's like, if you've got a pitcher of water and it's almost empty, everybody's trying to get a glass.
Right.
There's just not enough to go around.
And the thing is that limited access to money, it can really throw a wrench in the whole economy, right?
Exactly.
Because if businesses can't get loans as easily, they're much less likely to do things like expand, invest in new ideas, or even create jobs.
Yeah, which ultimately impacts us all. But okay, let's look at it from another angle for a moment. On the surface, lower interest rates, that sounds like it should be a good thing, right? Cheaper loans, more people can borrow money. Doesn't that usually mean a boost for the economy? So why isn't it a win-win here?
Well, you see, it's not quite as simple as lower rates, booming economy.
Right.
This article, I thought, did a really good job of highlighting inflation. Because if prices on everything from groceries to gas, keep going up while interest rates are low,
yeah,
it kind of cancels out any good those lower rates might have done.
Right. It's like you're trying to run up an escalator that's going down.
Exactly.
So you're not really getting anywhere. And I'd imagine that doesn't affect everybody the same way, right?
Absolutely not. It's those who are, shall we say, less financially flexible who end up really feeling the squeeze. Imagine you're just trying to put food on the table, pay rent, but prices keep going up, and your paycheck isn't any bigger.
Yeah.
Lower interest rates aren't much help in that situation, are they?
No, not really. It's not like someone in that situation is thinking about, I can get a business loan now.
Right.
This article made a comparison that I found really fascinating.
Yeah.
And that was to Japan, because they've been dealing with low interest rates and kind of this stagnant economic growth for decades now. What lessons can we learn from what they've gone through, and how does it apply to us?
Well, Japan serves as a cautionary tale. They've been mired in this low growth, low inflation rut, often called stagnation.
Right.
Despite years of these low interest rates. And I think one of the biggest takeaways is that simply cutting rates isn't some magical solution. It might give a little temporary boost, but it doesn't get to the root of the problem. It doesn't fix those underlying structural issues, like we were talking about earlier, like this massive national debt.
Yeah.
They're holding the economy back.
Yeah, it's like putting a Band-Aid on a broken bone.
Yes.
It might look okay from the outside, but it's not really going to heal properly.
Exactly.
Yeah.
And the article even suggests that, we might be on a similar trajectory if we keep relying on these Band-Aid solutions.
Yeah.
Without really tackling the root causes, like this debt we keep talking about.
And that's where things get even more complicated, because we're not just talking about the Fed off in a room making decisions on their own.
Right.
There's government spending, there's political gridlock, there's the global economy. I mean, it's all connected.
It's a complex web.
Yeah.
Absolutely. And to your point, there's no one thing that's going to fix it all.
Right.
But like we said, just understanding these forces, how they all fit together,
Right.
that's a huge first step.
Knowledge is power. It
Yeah.
is, yeah.
Yeah.
A lot to digest, for sure. But that's what we're doing here, right? Trying to break it all down, make it make sense. And I know, you sent in this article because you're thinking about how this might affect you, how these big, economic forces trickle down. So let's bring it back around to that. If we accept that, yeah, the US has got some financial challenges ahead, what can we even do about it, at an individual level?
Well, I think that's a really important question.
Yeah.
And thankfully, it's something the article does touch on, particularly in its conclusion. And for me, one of the biggest takeaways is this. We have to think long term. We can't just keep going for that quick fix.
Right.
And that goes for, the people making decisions about the national debt, but it also goes for us too, right?
So what does that look like? Like, what are some practical things people can do?
Well, it might be something as simple as really sitting down and looking at your finances,
Hmm.
getting a clear picture. Are you prepared if things get a little rocky?
Right.
Maybe it's finally starting that emergency fund you've been putting off. Maybe it's, making sure your investments are diversified, or even thinking about ways you can boost your income.
So being proactive, not panicking, but also not just like assuming everything's going to be fine.
Exactly.
Yeah.
I always say knowledge is power.
Yeah.
The more you understand about what could happen, the better decisions you can make for yourself. Decisions that'll help you reach your own financial goals.
It's like they say, forewarned is forearmed, right? That's it.
If you understand what you're up against, you can handle it better.
Couldn't have said it better myself.
Well, I think we've given everyone a lot to think about today, but before we go, I want to leave you with one final thought. Knowing what you now know about the Fed, government debt, all these things that can seem complicated, what's one small step you can take today? Just one thing to make you feel a bit more financially secure, a little more prepared for whatever's coming next. Keep that in mind as you go about your day. Thanks for diving in with us.